Well guys, here today we talk about what in the heck is going on with this stock market. Look at it here today, okay? I mean, we went from a market that had the fastest crash ever, right? To then this extreme bull market, and look at it. I mean, now we're just on days like this. Dow Jones down 0.23%, the S&P 500 and the Nasdaq up 0.28%, okay? What in the heck is going on with this stock market? I want to talk about this, and you guys have to get ready for something. Something's going to take a lot of you guys by surprise. You're going to have no clue what's coming. You likely haven't been through a scenario like this, and you're going to wind up very, very confused on what the heck is going on. Okay, so I want to explain what is about to happen, and so you can be prepared out there and you don't get disappointed by something. Okay, and something I always try to do in regards to my YouTube channels, if we're talking about the stock market as a whole, which this video here today is dedicated toward talking about the stock market as a whole, I try to never hype the stock market in general in terms of being like, oh, Nasdaq's going to 20,000. Get ready, guys. Get in and invest all your money. I try to never do anything like that. And I try to never have a depressing tone like, oh, the stock market's going to go down 50% or something like that. There are definitely YouTube channels out there that consistently hype, and it's, the stock market to the moon. There's definitely channels out there that consistently everything is bad news and they just always have a depressing tone. I just try to give you guys the goods in my perspective. I will always lean a little more toward the positive side than the negative side. Obviously, the stock market goes up most years. I'm a stock market investor, obviously believe in the markets. I'm always going to lean a little bit toward the positive side, but I try never to go too far where I'm just like a hype machine behind the stock market, although I do love to hype a lot of stocks out there that I'm super excited about. So I hope you guys enjoyed today's video as always, and I hope you really enjoy the balanced view I'm going to really give you on the stock market. I'm going to give you a ton of insights, so make sure you smash the thumbs up for me down there. And just so you guys know, I have an exclusive link down there. It's the first link down there. If you're somebody that has 5 figures in the stock market and you're looking to scale to 6 figures over the next couple of years, or you have 6 figures in the stock market right now and you're looking to scale to 7 figures, go ahead and check out the first link down there. We have a new revamped Financial Fortress product that is pretty amazing. And if you're qualified, you can actually get on a call with somebody high up from my team. So if you want to go ahead and check that out, first link in the description, okay? Let's look at the Nasdaq Composite starting out here, okay? So Nasdaq here today, 10,500, as we spoke about, up 0.28%. It's at, right around all-time highs if you're looking at a one-year chart, right? It's like, dang, it's right up there, right? But if you notice over the past week or two, there's been kind of a leveling off of the Nasdaq. If you look, the Nasdaq really hasn't done much in the past week or two. Dow Jones Industrial Average, you're going to see this even to a greater extent, right? Dow Jones Industrial Average, obviously, it got really ugly. It reached into the 18s, came back like crazy, reached all the way above 27, and here we are. It's, over a month now, the Dow basically hasn't gone anywhere. I mean, the Dow was at 26.6 literally over a month ago, and it hasn't done anything as of recent, which means the markets are starting to level off here, okay? Now, this makes sense in my opinion, okay? Because on one hand, remember we looked at the balance scale earlier? One hand, you have the crowd that's saying, well, there's better days ahead. Economic data is getting better, right? Unemployment, GDP, earnings, everything has already troughed. Everything has already bottomed, and so there's just better days ahead. You have that side of the scale, but then you have the other side of the scale, which is like, hey, why don't we look at valuations a little bit? Let's look at how rich this market really is. And because you have those two sides, the market's kind of in no man's land right now. The Nasdaq's not really doing much. The Dow's not really doing much the past month or so. All of a sudden, we're starting to get even scales, okay? And here's the thing. A lot of people are like, why? Why? Because things are getting better, man. All the company earnings out there are getting better. And that's the perspective. And I understand that. All these S&P 500 companies, or almost all of them, are seeing their companies improve versus where they were at in March and April and May, okay? Business is a lot better for almost all these companies in July than it was a few months ago. And that's good, right? But we gotta talk about valuations. We gotta talk about where this market actually is here today. Not where the market was 2 months ago, or 3 months ago, or 5 months ago, or a year ago. Where's the market at here today versus the past, okay? We're looking at forward P's here of S&P 500 large cap stocks. They're at a 22.2 right now. This shows you all the way back to 2006. And look at, we're so far elevated than any time in recent history, right? And I mean, especially if you think about any time since I've been in the stock market. I got in the stock market 2008, 2008, 2009, right? I mean, just look at any time I've been in the stock market, we're paying the highest prices for large cap S&P 500 stocks that we've ever paid in recent history, okay? Let's look at S&P 400 mid caps. Also very high, not as high, okay? A 20.7 for the mid caps. It's still high. It's still literally higher than any time in recent history, any time within the past, 14, 15 years, but it's not as crazy as we saw with the large cap. Very interesting there, okay? S&P 600 small caps. Once again, the numbers have come down recently over the past week or two, but they're still really, really high. By the way, all this information I'm showing you as far as these charts, it's out of this company named Yardeni Research, okay? I actually put out some phenomenal data around forward Ps and those sorts of things. But like, look at that, it's at a 23.9. It's still far and away higher than any time in recent history. This chart here shows you S&P 600 small caps at a 23.1, okay? This goes all the way back to the tech bubble days, and we're above even the tech bubble days, okay? That's pretty crazy, because if you ever look at valuation type data around either S&P 500 or especially Nasdaq back then, you're going to usually find the highest PEs, forward Ps, anything across the board happen in that 99 to 2000 range. That was a tech bubble, and valuations pretty much haven't reached those type of levels since then. Thank goodness, because I can tell you, valuations were so out of whack, and it's why we still talk about it. Here we are 20 years removed from the tech bubble, and I'm still bringing it up as reference 20 years later. That's how important that time period was, and that's how out of whack things got valuation wise. And this is why when it comes to stock market, it's not just about all stocks grow to the sky. It's about valuations and being somewhat realistic with these companies. Here we look at median forward PEs for the S&P 500. So this is a median forward P, okay? You look at it, since I got in the market 2008, 2009, we're the highest, okay? We're the highest we've been. Now it is down over the last few weeks, and that's good news, but we have to be honest, we're still the highest of any time in recent history. That's something very important. That's median forward P for the S&P 500. If we look at these charts here, okay, this shows you the S&P 500 forward PE, that's in blue, okay? That's a 21.9 right now. If you also look at the S&P 500 median forward PE, we're at 18.5. That essentially means there's some stocks that are just trading at absolutely insane PE ratios in the S&P 500 for the forward and the mid to be that disconnected, okay? Usually they're somewhat connected. Right now we're in a time period where things are very, very disconnected. This essentially means that growth stocks are just trading really, really richly. Let's just put it that way. But literally, you look at it since I got in the market 2008, 2009, it's the highest. It's the highest for both of those, okay? It's the highest for median forward P, and it's the highest for just forward Ps in general, okay? Something very, very important there. Let's look at this one. This shows you S&P 500 PEG ratio, okay? This is a price to earnings growth ratio. If we look, once again, since I've been in the market 2008, 2009, we're the highest we've ever been, and by a large margin. By a large margin. I mean, look at how far up that chart goes. It's at a 2.1. There's been no time in recent history we've been at a 2.1. It's extremely high. It's down from its peak level, a few weeks ago or a month ago or so, but gosh, I mean, it's still really, really tremendously high, okay? If that's not enough, let's look at the forward P growth versus value and look at how disconnected these have begun to get, okay? The growth for S&P 500 Citigroup growth versus value is at 27.6 now. That's the blue one. Look at how disconnected it is from value. You could always expect usually growth to trade much more richly than value, but we haven't seen this type of disconnect since 99 and 2000, okay? Now, is it at those levels? Absolutely not. It is not at those levels, but we haven't seen it this big since then, which gives you a little time to think about, wow, yeah, things are getting better in the economy and things like that, but gosh, these valuations are pretty dang high when you just look at the facts, you look at the data behind this, okay? And you might be looking at all those charts and you're like, we just went over, what, 10 different charts there or whatever, and you might be in bed right now like I was when I was prepping this video, and you're like, what the heck does that mean, Jeremy? Like, what does all this mean, okay? It means two things, and these two things are very important, okay? The first is the market is expensive right now. There's no debating that. I don't care if you're the ultra most bullish person in the world and you are just such a massive believer in the markets. Great, okay? We're still expensive. I don't care which way you slice it. We're in an expensive market right now, but specifically expensive around growth stocks, okay? This is where things are really richly priced. Anything growth stock related is trading unbelievably rich right now. We just went through facts, okay? Those aren't opinions. Those charts aren't opinions. Those are facts about where these companies expect their earnings to be over the next year, okay? Number two, a strong recovery in 2021 is already priced in. This is why the markets are trading the way they're trading. The fact is, investors, funds, everybody across the board is basically expecting a very strong recovery in 2021. A lot of folks are expecting many of these companies, businesses, to be right back to prior levels as soon as 2021. That's the facts, okay? Investors are expecting a strong recovery, okay? And what does this mean? Okay, this means two things. Expect a stock market correction if this scenario happens, okay? When I say a stock market correction, that is different than a stock market crash. If we say a stock market crash, we're talking about the markets going down 25, 35, 45%. We're talking about what happened in the financial crisis. We're talking about what just happened in March when the stock market dropped the fastest it ever has in history. It dropped like, what was that, 30-something% in 22 trading days? We've never, ever seen something like that happen before. But then again, it's pretty rare you get a once in 100-year event like Rona come out of somewhere. But expect a correction if we get a weak recovery in 2021, okay? If a weak recovery happens in 2021 when it comes to earnings, GDP growth, everything like that, expect a stock market correction because we're in a scenario where we've priced in a phenomenal 2021 and just things are right back to normal, okay? So if that doesn't happen, guys, and the market drops 5, 10, 15%, don't be surprised. And by the way, that would be healthy and that would be fine. There's nothing wrong with that. There's nothing to really be scared over, okay? Number two thing to expect is stagnation. This is a big one, okay? Expect stagnation. So many people expect the stock market to go up every day, every week, every month, and when it stagnates or particular stocks stagnate, they think like, what's going on? Why is this stock not really moving? It's the same place it was 6 months ago, or a year ago, or 2 years ago. I've seen some stocks, Tesla, right? That stock was pretty much in stagnation for like 5 years, right? Stagnation, this happens, okay? Why? Because so much is already priced in, okay? So much. We're going to go through an example here. I'm going to show you of what you got to get ready for, okay? So much growth is already priced in this market, especially when it comes to growth stocks, and many stocks are priced to perfection now. And when you're priced to perfection as a stock, it's usually not a great thing for your stock price in the short term because essentially this means you just come out with the best earnings you could ever come out with, unbelievable numbers. And if you report anything less than the most unbelievable numbers, your stock price goes down, okay? Get ready because this is going to happen with a dramatic amount of stocks likely, okay? And it just happened here today. Netflix stock, okay? This is a perfect example of exactly what I'm talking about in terms of these stocks being priced to perfection, and even if they report amazing numbers, the stock still goes down because Netflix last night reported, what would be considered amazing earnings, record revenues, phenomenal everything, and the stock goes down 6.5% today. That's how this stock gets treated after those amazing earnings. $15 billion in market capitalization gone here today, okay? And this is what a lot of investors aren't ready for, especially if they're newer to the market. They haven't gone through something like this. They're like, what? How does the stock go down 6.5% after those numbers? Let's look at how good those numbers were. This company just grew from $4.9 billion in revenue last year to this recent quarter. They do $6.1 billion. Their revenues were up $1.2 billion year over year in the middle of a Rona really bad situation where most companies are going to likely see what? Revenues go down and probably go down considerably. And here you have Netflix, a stock, a company that increases revenues $1.2 billion year over year. Phenomenal growth. I mean, absolutely phenomenal growth for this company in a once in a 100-year event, and their stock gets treated like this, down 6.52%. Are you kidding me? Are you flipping my flapjacks? That's how the stock gets disrespected after those amazing earnings, okay? Well, guess what? When it came to Netflix stock, This is a stock that's gone from under $300 back in March at those lows, right? To it was trading well over $500 a share. It had added about $100 billion of market capitalization in that amount of time when it was trading well over 500 based upon where it was at, at those March lows, 298, over 100 billion. Look at how richly priced the valuation it got. This stock was priced to perfection, and the market did not view those earnings yesterday as perfect. They were amazing. But amazing didn't even cut it because of how much this valuation has gone up. Look at Netflix for a moment, okay? September 30th, 2019, the company's trading at a market capitalization of 117 billion. Most recently, as far as as of yesterday, the company's market cap was trading at 230 billion. It added $113 billion in market cap. When you add $113 billion in market cap, you better come out with the most amazing numbers, or you're gonna probably see your stock price get hit, okay? The forward P on the stock, it usually always trades high for Netflix, but it's trading incredibly high right now. You go back to September, you're getting this company at a forward P of 48. It's a little rich, definitely, in general, right? A forward P of 48, but it's a lot lower than an 82, which is where it's been trading at recently, right? This stock is priced to perfection. Look at the price to sales ratio, how much it's gone up. It went from 6.86 back in September 2019 to now trading at 11. This means the company in general is just priced to perfection, okay? And when you're priced to perfection, expect a stagnating stock price or a downtrending stock price most of the time, unless that company is so amazing that they continue to beat, okay? So don't be surprised if you own a growth stock out there, or if you own several growth stocks in your portfolio, especially growth ones I'm talking about, okay? Not just stocks in general, but especially any of these growth companies that have seen their stock prices double, triple, quadruple up, and they report good or great numbers, and the stock goes down or stagnates. Do not be surprised. Do not be taken aback and whoa, what? How? The stock market's such a ripoff, man. I mean, how could my great growth, how could Zoom stock, my amazing growth stock report, 125% revenue and the stock price goes down? Don't be surprised if that happens, okay? I'm just gonna put that out there. And for my fellow Tesla shareholders, okay? You guys, I'm a big believer in this company, an investor in this company. Don't be surprised if Tesla comes out with really strong earnings, good news overall, and the stock price goes down to 1,300, 1,200, or something like that. Don't be taken back oh my gosh, how could this ever happen? The stock market, they don't respect Tesla. Tesla is priced to perfection here in the short term. That's just factual around this particular stock. Amazing's on, okay? Amazon. This company's went from, back in September, $850 billion market cap to $1.5 trillion now. It's at $700 billion of market cap in a matter of less than a year. And so when Amazon reports in a month from now or whatever, and they come out with earnings, and the earnings are amazing, and revenue growth is record highs, and it's amazing, don't be surprised if the stock goes down or doesn't really do much and just stagnates, okay? Don't be taken back this is so unfair. Why is my company Amazon here report amazing earnings and the stock goes down or just stagnates? Don't be surprised, okay? And don't be scared in this whole situation, okay? Do not be scared. Do not fear this. Do not be oh my gosh, what if my stock doesn't do anything? Or what if my stock goes down? And don't be scared about it, guys. There's nothing to be scared of, okay? There's still a few deals out there. It's like finding needles in a haystack in this current market right now, but there are still actually some deals in the stock market right now that you can find. There's some that I've been able to find recently, and there's still some out there, okay? And if we get more deals in this market, it would be great for all of us investors that are looking to buy in, unless you're retiring tomorrow or something like that, and it would be healthy. It would be healthy if we can get a stock market correction of some kind, or some of these, super high valued growth stocks can come down a bit to more realistic levels. It would be a healthy thing to happen in the stock market, and something that you should actually look forward to. Something that you don't be scared over this. Be thrilled. If this happens, this is good for all of us, okay? There's nothing healthy about a market that just goes up and up and up, and the Nasdaq goes from 6,600, 6,800 to 10,600 in a matter of a few months. The last thing you want to see is the Nasdaq go to 15,000 real quick or something like that. That's not healthy, okay? Healthy is when stocks can go down a little bit, especially for the short term, and they don't just go up every day, okay, guys? So hope you really enjoyed this video. Hope you learned a lot from it, between the data and just kind of giving you my perspective as somebody that's been in this market for over a decade. So make sure you smash the thumbs up button. button for me down there, please. And don't forget, if you want to check that out and you want to learn how to scale your account through our Financial Fortress program, you want to get on a call with somebody high up from my team, go ahead and check that out down there. It's the first link in the description. And that's really for folks that are, you're at 5 figures in the market, you're trying to get to 6 figures, or you're at 6 figures and you're trying to scale to 7 figures in the stock market. That's something I've been able to successfully do over time. That's what we teach. So if you're in any of those 2 categories, definitely check that out. First link in the description. Thank you for watching and have a great day.